Well, good morning, traders. It is the 26th of February 2016 right now. It is coming up on 1 o'clock Eastern Time, and my name is Thomas T. Ryan, and I am the founder of Thomas T. Ryan and Company, Daily Weekly Trading Opportunities. We publish a daily newsletter, 200 trading days a year into your inbox with some hand-picked trades of U.S. common equities. And I'm going to go ahead and do another one of our series today that I've been doing lately, talking about why we pick some trades and why we're in them, and today I want to talk about why we're staying in them. And that may be the most difficult thing I think that all traders face is what do you do in the face of adversity? There are an awful lot of services out there who will tell you that they have the magic touch to pick winning trades left and right all day long. And I'm here to tell you no such thing exists. You have to learn to deal with failure, and you have to learn to deal with, more importantly, when is a trade failing and when is it not failing. And when is it just simply going against you temporarily? Well, right now, if you're within a few days of looking at this from when I publish it, which is going to be today, the 16th of February, you know that we've been in the middle of a counter-trend rally that's turned into a fairly massive short covering rally. Here's the Dow. Again, for those of you who haven't looked at any of my videos before, I'll cover this very quickly. This is my TC2000 screen. This is the screen that we use to pick winning trades, both long and short. And right now we are in the middle of again, this is the monthly chart over here. This is the weekly chart, daily chart, hourly chart, 10-minute chart. All of these are separated by about a factor of 5 or 6. A week is 5 days. A week is 4 days out of a month. A day is 5 days out of a week. An hour, about 6 out of a trading day, and so on. So when you keep those separations and you use multiple time frames to analyze your trades, probably keep you out of most of the trouble, but here today I'm here to tell you it's not going to keep you out of all of the trouble. Because the trouble started here when we looked at this area right about in here. This is on the daily chart. We are in a downtrend. We are in a longer term downtrend. The MACD has turned negative on the Dow. This hasn't happened in quite some time, since basically 2008 when we had the big downturn. So I think most people are fairly certain at this point we are at least in some sort of continuing downtrend. Are we in a major bear market? I don't think anybody can say that just yet. But clearly we have some downtrending trend lines here. Moving averages are pointing down on the higher time frames, and we're within shooting distance of some of these moving averages crossing. Some of them have already crossed down here. Here we see the 12 is below the 50. So the question is, what are we doing? And we've made the basic position that we are in a continuing downtrend that's going to go on for a little bit longer, possibly down as low as some of these numbers down here is 14,000 on the Dow, maybe even 13.5 on the Dow. These all stem from breaking out of this upward trend. The upward trend in the Dow has been broken now. It broke over a year ago, close to 2 years ago, and it's now just continuing to slowly turn down. When is it going to turn back up again? I don't think anybody knows, but right now it's stumbling on this 50-month moving average. It kind of double bottomed here on this 15,660 Dow, and then it took off. And I think it took off further than anybody thought that it would. There are a lot of traders out there talking about how really upside down this market is. We probably should have picked up this 50-period moving average right here and turned down. And you can see that we did have a pullback right in here, but that quickly reversed and climbed higher. So personally, we've taken a little bit of a beating in the letter, as I showed you there on the opening slide. We're still beating the Dow on our daily trades. We're still beating the Dow on our weekly trades, although we're not profitable right now weekly. So hey, we're beating the Dow, but and we're still profitable with the daily trades. So that's a good thing. I'm fairly certain we're going to turn around and recover this at some point pretty soon. But right now, it's a very challenging environment. And what happens? How do you know when you're in, let's say, a bunch of shorts like I was personally? I day trade and swing trade other shorts, as some of you know, that are not in the letter. Often I'm day trading MACD divergences. Well, I'm going to show you one that I was in today. This has been going on for the last several days. I think I got in this. I got in this on the 22nd, right here, where it looked like this was going to go down. Nice big red candle. We're in a MACD divergence right here. We've got a sloping MACD right here. We got a sloping MACD on the higher time frames. This thing had sort of topped out and it looked like it was going to rise right into this congestion zone right here and then pull back. Pull back right in, hit this congestion zone right here, right? Hit this right here. No, I can't seem to draw it, but hit this congestion zone right there and then drop. But it didn't do that. In fact, this is General Mills. In fact, General Mills went a couple of more days green, reversed that red candle right there, and then took off to the moon right up here. So I'm sitting in this trade negative. What do you do? Well, you take stock in what your original assessment was of this position and why you were in it to begin with, first of all. So has anything changed in what we're doing, what I was doing in this particular trade? And the answer is, well, maybe, but probably not. Here we see again, I'm betting against a strong upward trend in a very large multinational corporation. A downturn in a very large multinational corporation is going to involve hundreds of millions of dollars of people losing money. So we have to decide, is this going to happen or isn't it? Well, I'm not necessarily looking for this stock to, completely fall out of bed, but I was looking for a significant pullback down to probably around 55.67, which is this pivot point right here, maybe even just 57.09. So I was looking at this as a 1 or 2 day swing trade going from here down to about here. Totally reasonable, not greedy, should have happened, but it didn't happen, and that's the way the market works. So it took off up here, and I decided to stay in it. Why did I stay in it? Well, nothing had really changed. Weekly, the stock is still overbought on 2 stochastic indicators down here on a weekly basis. It has a very flat overall MACD, and lately it has a very declining MACD down here. Next thing that happens is, and of course this higher time frame, everything is negative about this stock. It is completely divergent for quite some time on the higher time frame. And here it looked like it was perfectly positioned well above the averages, right up in there, right up in here, and in a congestion zone, had recently pulled back and recovered back up into it with not particularly wonderful volume. You see this volume here, still high, but not, not great, and declining slightly. The other thing that I was looking at right here was, here is this perfect situation. On a daily basis, this thing had run up and the volume had declined. And then we got a big red candle on the red day. So it looked like this was working out just fine, but it didn't. And what happened was, I think a lot of people could speculate, was the market being potentially manipulated by the Fed? People on zero hedge will tell you that. Who knows? But it was clearly a massive short covering rally that happened, and my stock got pushed right back up in here. So I'll tell you honestly, I'm in a 200 share position in this thing. So I'm about, what is that, $11,000 or so. And the stock went against me. So I was negative $500-600. I can handle that risk. That's not a problem. But, certainly not comfortable. But I decided to stay with it anyway because I believe that everything here, the market is negative, this thing, the MACD is negative, it's well above all its averages, it's sitting, look at these Bollinger Bands up here. I mean, it was ridiculously high. So it had to come back. And sure enough, finally today, when the momentum, this long short covering momentum finally left the market, we had this happen. And while I am not profitable, I'm probably about to be profitable. And now we have a key reversal essentially happening right here. Straight up, straight down, almost a full bearish engulfing candle here on General Mills today. So that's all, as far as I'm concerned, for a short position. This is good, and I think I probably will be able to see this come down to about this 57.09 pivot, or maybe even the 55.67, depending upon what the market overall does. So it's a Friday right now. The stock has had a big move. It's probably going to, sit here for the rest of the day. I don't know that we're going to see much else happen on this today. But the stock is still overbought on 3 time frames with negative MACD over here. The momentum is finally starting to leave. And so I'm more confident. So in this particular case, I had manageable risk. That was number one. I had all of my ducks in a row for what I thought was a pretty solid short opportunity. Again, overpriced, up and above all the averages, negative MACDs on all these time frames, overbought on all these stochastics. This thing was a complete surprise, which happens, but I stuck with it, and now I have a full bearish reversing candle today, and reasonably confident, I'll probably pull 1 or 2, maybe 3% out of this trade over the next couple of days. So that's what I do sometimes. I don't do that all the time, but that's what I would do when you see things that really, I think a lot of people the last few days have been scratching their head and are going, what in the world is going on with this market? Because really nothing made sense. And when your fundamental reasons that you're in a trade are still valid, and nothing really has changed, and you have that sense that, gee, this market is really just going kind of crazy. With manageable risk, I would stay with the trade, and eventually, what I think you'll find is you'll probably, at the very least, be able to get out of it break even rather than taking a loss. But at the best, it will probably materialize into what you had hoped that it would, as we'll follow some of these down into maybe a little bit more of an oversold position and probably make a decent little 2, 3, 4 day profit. Well, I would say 1, 2, 3, 4. I'm in the 4th day of this trade, so maybe after a week or so, I'll get out of this with a modest profit. That's it for today. I hope you enjoyed that. Stop by. These are not, again, I'll back up again for a second. This is a MACD divergence trade that General Mills that I'm doing on my own. This is not what I do in the letter, but if you're interested in some of these and you want to see the trend trading that we do in the letter, love to have you on board for that. And here, I'll show you another one real quick. This is one that was in the letter this morning, Delta Airlines. This is also a MACD divergence a little bit, although a little bit of a trend trade too. This looks so powerful. This is why we picked this up today. Again, you see a multi-year long divergence on the weekly time frames. Double tops up here, double tops, divergent, and boom, right back up into this potential congestion zone here on low volume. Means we're going to have a pullback. And sure enough, we did have a pullback, and we got 1R out of Delta Airlines this morning. We'll stay in the trade unless we stop out break even on the back end, but we'll stay in it and hopefully look at some of these targets down in here, maybe 2R, maybe even 3R on Delta Airlines over the next week or two. Again, love to have you join us on the letter here. It's a free trial, 30 days, no charge. We don't need a credit card. Just put in your email address and check us out. See what you think.